What are we talking about today? I have no idea, so I guess we'll just start with spot Bitcoin ETFs. Well, actually, let's just start with Bitcoin. I asked you on our community tab what you felt was the cryptocurrency with the brightest future. I think there's some bias built into this poll because it was given to you on our YouTube community channel the same week that spot Bitcoin ETFs made their debut here in the US. And look at this, 61% of you felt, based on the vote, that Bitcoin had the best future, and that far exceeded all the other cryptocurrencies out there, including Ethereum and the many others. And then, it's not really difficult to understand all the enthusiasm about Bitcoin. I mean, after all, this daily chatter surrounding Bitcoin ETFs is sort of warranted when you think about it. I mean, no other asset in the history of investments has reached a $1 trillion market cap faster than Bitcoin. And so the enthusiasm, the discussion of Bitcoin, obviously, is on a lot of people's minds. Now, in terms of spot Bitcoin ETFs, after years of application denials, Gensler and Company, also known as the Securities and Exchange Commission, approved an incredible and long-awaited 11 spot Bitcoin ETFs all on the same day. And among that group was the Grayscale Bitcoin Trust, which was actually converted to an ETF. That one has about $27 billion in assets. So by default, it's already the largest Bitcoin ETF. But you'll notice the fees of that ETF, 1.5%. When will Grayscale cut fees on this? How long will it take them? How much in assets will they lose or decide to lose before they reduce fees? Some of you wondering, well, which of these spot Bitcoin ETFs is going to be the big winner? Well, let me just say that spot Bitcoin ETFs are going to be just like the Indianapolis 500. You're going to have 33 cars that start the race, and then you're going to have 15 drivers that actually finish the race. And then there's going to be one big overall winner with several smaller Bitcoin ETFs just behind. And so right now, this is the starting point. We got 11 spot Bitcoin ETFs at the start of the race. And over the course of the next, let's say, 6 to 12 months, we'll be down to probably 6 or 7 Bitcoin ETFs. And then in another 6 to 12 months after that, that number will probably be cut in half or close to it. And that's how this is going to shake down and shake out, folks. The spot Bitcoin ETF with the lowest fee, the tightest bid-ask spreads, and the deepest options volume, that's the ETF that's going to get all the assets. And so it's still too early to know or say who that's going to be. But it's an unfolding, developing event that we will be closely monitoring and keeping you informed about. Now, the launch of the first U.S. spot Bitcoin ETF was such a big deal. It was covered by mostly, well, actually all the major media outlets, but also the very mainstream New York Times, the grammar experts over there at the Times, who keep referring to ETFs as E period, T period, F period, apostrophe S, instead of just referring to them as ETFs like the rest of the world. Now, if there's any business students and media moguls watching right now, I want you to know that uncorrected grammatical errors, that's the first sign that your media empire is in an epic decline. And it's happening, of all places, in the business section of the New York Times. Now, thankfully, the arts section is keeping the paper afloat. Thankfully. It's the artists that are keeping them afloat. So the correct spelling is ETFs. Incorrect is E period dot T period F period apostrophe S. So we all understand this. Hopefully English majors are taking note. Now, I caught the New York Times red-handed. Instead of referring to ATM as A period, T period, M period for their employee credit union, they spell it like it should be spelled ATM. So why the double standard at the New York Times with ATM and then the dogmatic misspelling of ETFs in the New York Times? You'll need to ask again the English majors running the joint. Now let's talk about the benefits of Bitcoin ETFs because there's so many benefits. This is, first of all, going to pave the way for other spot crypto ETFs to launch. I'm really excited about the diversified spot crypto ETFs that are coming. That's going to be fun because it's going to give investors, instead of a one-trick pony approach, you're going to be able to invest in a diversified basket of cryptos and just be able to have a more complete exposure to the asset class. You can also own Bitcoin ETFs in a directed or self-directed IRA or Roth IRA account for those of you that want to do that. Lower ownership cost versus owning Bitcoin on crypto exchanges. And that's the one thing that ETFs have done so wonderfully. They have just slaughtered investment costs, reducing them to the lowest degree possible for the average everyday investor. And we're going to see that with Bitcoin. ETFs are already lowering the expenses. In that earlier chart that I showed you, you'll notice that the fee waiver on some of these spot Bitcoin ETFs, they're not even charging fees. They're at 0% for some of these ETFs for the first 6 months. So that's pretty fantastic. It's already cheaper to own a Bitcoin ETF than owning it on some of these and trading it on some of these crypto exchanges like Coinbase. Also, how about the convenience? No need for self-storage of your Bitcoin. I think it was comedian John Oliver who said that the Bitcoin is everything that we don't understand about computers combined with everything that we don't understand about money. And let's face it, for some of us, holding our own crypto coins can be a daunting thing. And so Bitcoin ETFs do all of that storage for you. It's included. And that limits the risk of losing your Bitcoin to hacks or scam exchanges or forgotten passwords or lost hard drives with wallet private keys and all that stuff. You also get the ability, when the options come out, to hedge your positions if you're trying to protect profits with put options. And then you can also flip your Bitcoin into a source of income with call options. So again, lots of flexibility that Bitcoin ETFs are bringing to the table. Now, let's talk about Bitcoin ETFs and taxes. And for the anarchists that are watching, you can skip this part. But assuming that you hold your Bitcoin, this is for the rest of us, assuming you own your Bitcoin ETFs inside a taxable brokerage account, that is an individual or joint account, you can sell your Bitcoin at any time, obviously. But if you hold it for at least 1 year, if you own your Bitcoin ETF again for at least 1 year and you have a gain, that's going to be taxed as a long-term capital gain. And this type of gain will not be taxed as ordinary income. However, you're still going to use your taxable income to determine the long-term capital gains bracket that you're going to be in. So depending on the level of your income and your filing status, as this table illustrates, you're going to generally pay either between 0, 15, or 20% on your long-term capital gains for your Bitcoin ETFs. Now, for those of you, the inquiring minds wondering, well, what about short-term capital gains? Well, tax rates for short-term capital gains on Bitcoin ETFs will range from 10%, that's on the low end, all the way up to 37%, depending again on your overall taxable income and your filing status. And that, of course, again, that's for short-term capital gains. That's for Bitcoin ETFs held for less than 1 year. So where does Bitcoin ETFs, if you decide to own them, where do they belong? What's the context? And this, of course, is something I teach on this channel. We want to obviously understand the correct application of the asset in the context of an investment portfolio. And as I teach it, there's 3 cornerstones of an architecturally sound investment portfolio. There's the margin of safety, which is for the assets that cannot lose value. That's what's going to protect you in times of crisis when markets are crashing. This is the stabilizing force in your portfolio. Then you've got your core, which is typically diversified and low-cost index ETFs that are proxies of major asset classes, from stocks to real estate to commodities. And then you'll notice I've got non-core highlighted in green. Non-core is where an asset like Bitcoin belongs, if you own it, if you even decide to own it. Again, Bitcoin is a non-core asset class. It's in the process of maturing and growing up. Maybe someday it will become a core asset. It's not there quite yet. But if you're going to own it, again, like I said, the proper context is the non-core portion of your investment portfolio. This is what I teach in my my books as well as my online courses, as well as on this channel. My latest book, Portfolio Architecture, Handbook for Investors, I've got the link below. It's available as an audio and ebook. You can get your copy. Now, this takes a look at the 2024 year-to-date performance. Of course, it's still early in the year, but you can see here Bitcoin in the blue is still the leader despite a drop-off in performance. We had this massive rally leading up to the launch of spot Bitcoin ETFs and then this cliff dive. Bitcoin was up as much as 11.5%. Now it's up just 1.67%. It's still leading major asset classes from U.S. stocks to commodities and bonds, as well as global real estate. But you can see just how volatile Bitcoin is and can be. It's interesting to note, this is the 3-month chart leading up to the launch of spot Bitcoin ETFs, and you can see it was a bull rally. It was just up, up, up and away. CONL is linked to, this is an ETF with 1.5% daily leverage to Coinbase stock, and you can see what a massive run-up it had. It was up as much as 270%, dropping off, and now in correction mode. But again, this just shows you just how volatile cryptos and anything in that particular category can be. So be very careful. I also wanted to give you some historical context because the last time we had a U.S. Bitcoin ETF launched, we got to go back to 2021. BITO, which was technically the first Bitcoin-linked ETF ever launched. This uses futures contracts on Bitcoin itself, and there was a massive rally leading up to the launch of BITO. I take you back to 2021. That's when Bitcoin hit its all-time high of $65,000 for one coin. And BITO, it was launched right just there about at the peak. And then after that, it was all downhill, 75% crash. Now, of course, since then, it's recovered some, but has yet to get back to its peak level. So this, again, I'm not saying that the future is going to necessarily predict what's going on right now or what happened in the past with Bitcoin is going to happen in the future. We don't know. But again, I just wanted to give you some historical context because we have seen similar action in Bitcoin itself with the launch of U.S. spot Bitcoin ETFs. In terms of S&P 500 industry sectors, look at this. We've got a new leader, and it's the healthcare sector, XLV, which is this year's leader. Of course, like I said earlier, it's still very early in the year, but healthcare was a laggard in 2023. Now it's a leader, and we're starting to see some leadership change in some of these industry sectors. XLC, which tracks communication services, was a leader all year long, and it continues to add to some of its gains. Consumer staples, XLP, which is a historically defensive industry group, that was also a laggard. Now it's starting to show some signs of life. In terms of other things that you should be aware of, I'm pleased to announce that we have a brand new playlist on ETF Guide TV called Let's Get Real, Investing in Commodities with USCF. And I'm so excited about this, and you should be too, because it focuses on an asset class that I think is underrepresented in most investors' portfolios. And this new channel, actually new playlist, it's not a channel, it's a playlist, is going to be focused on all things commodities. And so you've already seen a couple of videos that have been launched. We had one on aluminum. We also had a podcast called The Real Spiel with Ryan and Kurt talking about the fundamentals of commodities. And so this is what you're going to get on a weekly basis is information, education, trade ideas, investing ideas, and actionable moves with specific ETF tickers linked to commodities. And I think you're going to enjoy it. And I hope you've already been able to digest some of these wonderful videos. You're going to get more. Also with the new year, I'm pleased to announce that we've got new seasons for our original programs like First Look ETF, ETF Battles, as well as Portfolio Makeover, and the others. So that's still coming at you. And then we've also got several new original shows in pre-production, in the pipeline, that will soon be released on ETF Guide TV. And I'm really looking forward to that. So be sure to binge watch and tell your 10 million friends about ETF Guide TV. Also, I will be launching, this is going to be free to all of our viewers, still working on the final details, our free ebook called 60 Smart Ways to Retire Better. It's going to have fresh 2024 updates and exactly the things you need to be doing right now to prepare yourself for retirement. And then finally, besides building world-class original programs on this channel, I'm also building world-class tools for investors just like you. And so the margin of safety tool that you see and I've talked about on this channel many times, it's available at etfguide.com. These are the types of tools that are going to help you with your investments. It's going to help you make your portfolio safer, stronger, and also help you navigate the ups and downs of unpredictable markets. So take advantage of some of these things that we're building and helping you with at ETF Guide. Again, that tool and all of these items that I just mentioned here are available in the description section below, so be sure to hit that. Well, I hope you enjoyed this episode on ETF Guide TV. Hit the comment section below to let me know your thoughts. I'm Ron DeLegge with ETF Guide TV. We'll see you on the next show.